Good morning and welcome to the Killik & Co market update. We're going to start with the consumer this week, and there have been further signs emerging of how the increased cost of living is impacting consumer behaviour. In the UK, supermarket chain Sainsbury's provided its first quarter trading statement on Tuesday, with the company reporting that overall sales were lower by 4.5% compared to the same period 1 year ago, with a notable slowdown in its general merchandise category, where sales were down by 11.2% year over year. While the results were broadly in line with expectations, management noted the impact that the cost of living crisis is having, stating that they are seeing some customers trading down into economy own label products, while in general merchandise, which includes sales at Argos, demand is particularly challenged for big ticket items. In a similar vein, white goods retailer AO World announced an equity issue this week, as it looks to shore up its finances following a sharp decline in its share price over the last 12 months. The company, which was something of a COVID beneficiary as people spent more on items for their homes during periods of lockdown, has pointed to a challenging post-pandemic environment as spending shifts from goods to services, and as relatively bigger ticket discretionary purchases, including consumer electronics, are delayed as the increased cost of living begins to bite. The effects of the current macroeconomic environment are also being felt beyond the consumer sector, with recent reports stating that financial services firm Klarna is set to raise fresh capital at a fraction of what the business was valued at just a year ago. The buy now, pay later provider is one of Europe's most valuable private companies and was also a pandemic beneficiary as e-commerce penetration skyrocketed as people were largely consigned to their homes. However, as normal economic activity has been resumed, the valuations, both public and private, of companies that benefit from the growth in e-commerce have taken a hit, with the Financial Times reporting that the capital raise at Klarna values the business at $6.5 billion, down from $46 billion last year. While higher discount rates due to rising inflation are also having an impact, Klarna's business is potentially being hit from multiple angles as online sales normalise following the pandemic, as consumers cut back on spending due to the cost of living increases, while there is also the risk of a rise in defaults in the current environment. Additionally, competition has been increasing, with Apple recently entering the space. Publicly listed buy now, pay later company Affirm has seen its share price decline by 70% over the last 6 months. Next up, the UK held its latest subsidy auction round for renewable energy projects this week, awarding CFD contracts to almost 11 gigawatts of renewable capacity, including offshore wind, onshore wind and solar. Of the technologies, offshore wind had the most success, winning 7 gigawatts of capacity, followed by solar and then onshore wind. Offshore wind also emerged as the cheapest of the technologies, with a strike price of £37.40 per megawatt hour, down from £40.70 per megawatt hour at the previous auction round held in 2019. The subsidy contracts last for 15 years and provide a guaranteed price for the energy produced by the projects, while also limiting upside for developers. With a recent increase in power prices due in part to the war in Ukraine, it has arguably become a more difficult decision for developers whether to try and obtain subsidy support for projects or to pursue other options that may have greater upside, and we are seeing a variety of strategies from the largest players in the space. Finally, turning to the week ahead, we're a few weeks away from earnings season kicking off in earnest, but we do have several US banks reporting next week, including JP Morgan on Thursday, while we are also expecting numbers from United Health Group next Friday. That's it from me. Have a great weekend. We'll see you next Friday.